Bitcoin versus Ethereum. Which one is better? Hey guys! Today we are going to be looking at some of the key differences between Bitcoin and Ethereum. But before that, how does a blockchain work? What are the benefits of an exchange with no central administrator versus those where the government has control? Will the world reach a point where cryptocurrencies rule the financial market? Be sure to stick around to the end of the video to get answers to some of these questions. If you're new to the crypto world, then you have probably encountered this question: Ethereum or Bitcoin? Which to invest in? When you look at the basics, the cryptos are almost similar, but their objectives vary. Both cryptocurrencies have grown to have large market capitalizations, with Bitcoin leading the pack at over 150 billion and Ethereum having 84 billion. Let's look at how these cryptos operate. Bitcoin and Ethereum operate in similar fashion, in that both are digital currencies traded on online exchanges, and you get the ability to store them in digital wallets. Both cryptos are decentralized, which simply means they do not need to be regulated by an authority like central banks. To operate, both cryptos use a distributed ledger called a blockchain. Once people realized the success of blockchain technology with Bitcoin's success, people started becoming creative, finding other areas where they could use the technology. Ethereum was birthed on this principle and leverages on smart contracts to eliminate third parties and create a decentralized process. Ether is the currency used for Ethereum, and it has become highly liquid. There are no physical coins with Bitcoins, but rather you have balances recorded in a public ledger. To better understand their key differences, whenever you hear the word Bitcoin, think digital money, and whenever you think of Ethereum, think smart contracts. When Ethereum started, it was designed to complement Bitcoins, but it has grown to now compete with Bitcoins. From the table, you can see that a lot of transactions are occurring through Ethereum, which has seen significant growth overtaking Bitcoin. Ethereum is an open-source service that leverages on blockchain technology to facilitate cryptocurrency trading and smart contracts without the need for a third party. You have two types of contracts available on Ethereum: contract accounts and externally owned accounts. The latter are privately controlled keys influenced by human users. The platform also allows developers to deploy their own decentralized apps. Some of the key differences between the two include: while Bitcoin only trades in cryptocurrency, Ethereum offers more modes of exchange, like Ether, their cryptocurrency, Ethereum Virtual Machine, EVM, and smart contracts. The exchanges also have different security protocols, with Ethereum using proof of stake, while Bitcoin using proof of work system. Ethereum uses permissioned and permissionless transactions, while Bitcoin only allows public ones that are permissionless or censor-proof. When it comes to average block time, Ethereum performs better, as it only takes 12 seconds compared to Bitcoin's 10 minutes. What this means is that miners can confirm more blocks of Ether than Bitcoin. By 2021, it is estimated that half of all Ether coins will have been mined. This translates to a supply of 90 million tokens. The majority of Bitcoins have already been mined, and supply has been capped at 21 million. The reward for miners also varies, with Bitcoin miners are used to run and verify transactions. Once done, they are paid through Bitcoins. For Ethereum, you miners do not get block rewards, but instead receive a transaction fee. One key benefit of Ethereum over Bitcoin is that it allows individuals to do much more than transact money. Bitcoin has primarily been used as a store of value and medium of exchange, while Ethereum was designed for programmable contracts via Ether. From this table, you'll notice that Bitcoins have a considerable edge over the other cryptocurrencies in terms of market capitalization, but Ether is on the rise. How they started. Bitcoin. An anonymous person called Satoshi Nakamoto started Bitcoin in 2009. Bitcoin leverages on blockchain technology to create a digital currency. The crypto has grown to become almost the defunct leader in the world of cryptocurrency, having an outstanding dollar value of $150 billion. When Bitcoin was started, it symbolized a drastic shift of how digital money operates with no control from the central government. A white paper introducing Bitcoin was shared online by Nakamoto. This was not the first attempt to create a cryptocurrency, but Bitcoins became the most successful. The first real transaction happened at Papa John's in Florida, when a Bitcoin miner bought 2 pizzas for 10,000 Bitcoins. These Bitcoins would have a net value of more than $100 million under today's exchange rates. Initially, the price for Bitcoins was negotiated in various online forums, with people bartering for goods and services. This meant the price was largely arbitrary and subject to lots of factors. The coins would later be available in exchanges in 2010, further enabling it to unlock more value. The currency grew from a worth of a few cents to over $20,000 per Bitcoin. In 2013, the price of Bitcoin was $200. Then, by the end of the year, it had hit $1,000. By November 2017, it had grown tenfold to reach $10,000. During this time, the highest price recorded for the crypto was $19,650 in December of 2017. Today, the price has doubled to almost $38,000. One hallmark to the rise of the price was in 2017, when many analysts speculate was when Bitcoin experienced a bubble like the one we had for internet companies. Today, the market has more mature investors and price fluctuations are not as wild. Most people continue speculating as to the identity of Bitcoin founder Nakamoto, as he still controls most of his Bitcoins. Ethereum. A programmer called Vitalik Buterin in 2013 proposed the idea of Ethereum. However, development would start later in 2014, and the network went live the following year. At this point, around 72 million coins were primed. When Ethereum co-founder started the company, he was quoted as saying that he believed the Bitcoin community was not addressing issues the right way, hence his desire for a separate platform. Buterin got into the Bitcoin craze when he was 17 years old, when he launched a magazine called Bitcoin. At this point, he started thinking of a platform that would go beyond financial use, and this inspired him to come up with a white paper for Ethereum. Things started moving when they were able to raise more than $18 million through a crowdsourcing campaign where investors were sold Ether. Today, the platform has thousands of developers and keeps growing. However, things have not been that rosy. In 2016, some 50 million Ether were stolen by an anonymous hacker, and this led many to start questioning the platform's security policies. After this, the platform broke off into two communities, Ethereum Classic (ETC) and Ethereum (ETH). The price of Ether has enjoyed tremendous growth, accelerating by up to 13,000% in 2017. Since it is a relatively new platform and idea, the price was very volatile as investors take a cautious approach to cryptocurrency. From the table, you can note that the price of Ether has been a bit stable with some volatility being experienced in 2018. It's during this time that one sees a spike in price that later falls. Future of cryptocurrencies. The two main cryptocurrencies, Bitcoin and Ethereum, have experienced exponential growth that has boosted demand and their popularity. Many people who bought into the cryptos early on when they were launched have today become multimillionaires. Some analysts are bullish about the future of cryptos, while others have taken a more cautious approach due to the risks involved. What we do know is that the blockchain technology is going to find widespread use in various industries like hospitals, governments, and various private institutions that hold large data. Many people are still feeling the disappointment of the drop in Bitcoin prices when they rose to unprecedented levels in December 2017, only to crash months later. Many also believe that the surge was a result of individual investors cashing in rather than the rally being led by the institutional investors. Today, you have various instructional investors supporting the coins like PayPal, JP Morgan, and Fidelity Investments. Crypto wallets are becoming more popular, with many people starting to embrace them. Do you think more institutions are going to embrace blockchain technology? Will Bitcoins grow to a level that they replace established currencies? Tell us your thoughts in the comment section below. Also, if you enjoyed this video, give us a thumbs up and subscribe for more news. See you on the next one.